If you've been trading using support and resistance like most people do, let's face it, you're probably not seeing the best success rate trading that way. You mark your levels, you wait for price to react, and either it breaks out or worse, it reverses on you. The problem is that you're using support and resistance the wrong way. You have to use support and resistance with Confluence with other confirmation. Now, Confluence is when you look at confirmations from other things such as supply and demand, key levels coming in from your aggressive buyers or sellers. The problem is you're using support and resistance the wrong way. Whenever we are looking at this concept, we have to look at it with Confluence to other concepts to give us a better conviction. So today I'm going to show you how to properly use support and resistance with Confluence to volume, price action, supply and demand, and looking at the tape where it shows you if there's aggressive buyers or aggressive sellers, pretty much showing us who is in control. All right, let's dive in. The problem with traditional support and resistance is traders think that drawing a magical line is going to give them high success rate in trading, when that's not the case. Right? If you don't have Confluence supporting that level. The problem with support and resistance is when people draw these lines, they expect those lines to be respected, either a reversal or a breakout, without using any Confluence, without using any conviction with other indicators. But markets don't move like this. Now, the real reason why price reacts at certain level is because of liquidity, like I mentioned before, aggressive buyers, sellers, or supply and demand. And when we join these concepts together, it gives us a higher conviction and a higher confirmation for that trade to work out in our favor. Because at the end of the day, trading is all about probability. So the more probability you have in your favor, the higher success rate you will have. So one thing I want you guys to start focusing on is, rather than looking at support and resistance as these lines, start looking at zones. These zones are also called supply and demand zones. Demand zones are areas where you have large buyers that absorb the sellers when the stock price is dropping into that area. When that happens, we tend to see a reversal happening if that absorption actually takes place. Supply zone is where we have aggressive sellers absorbing the buyers. When stock price is going into this zone, we usually start seeing a reversal. Now, the key thing is you want to combine this with volume and level 2 time and sales or market depth. This will help you understand if that absorption is real, happening in real time, or if it's going to give you a higher chance of breaking through those zones. Next part you want to add on to have a higher conviction rate is going to be volume. The amount of times I've seen traders ignore looking at the volume is insane. If price action is going into a key level, it could be supply or demand zone, and there is a lack of volume, the chances are that we're not going to see a breakout, where we're most likely going to see a slowdown or a reversal. But if you have aggressive volume going into a particular zone or a level, the chances of a breakout or momentum coming in is going to be much, much higher. But now, if you're not looking at this and you're just looking at a strictly key level and you're expecting it to either break out or reverse, that's the chances of that are going to be very, very low. So when we start combining these things together, it gives us a higher conviction rate. Now, building up into those levels, we want to see if there's aggressive buyers or aggressive sellers. And the only way to do that is by paying attention to the tape, also known as level 2, in combination with time and sales. This gives us a better understanding if buyers are in control or if sellers are in control. Now, we're getting our confirmation from a supply or a demand zone. We're looking at volume going into that key level to see if it's strong volume or if it's weak volume going into that level. And to top it all off, we add level 2 in time and sales, which shows us real-time data that is coming in from buyers if they're aggressive or if sellers are aggressive. Now, you can look at multiple different things in terms of level 2. There's also footprint charts that you can add on to your trading, but I think that is a little bit more advanced for a lot of new traders. So you want to start off with level 2 and time and sales. You can also add bookmap as well. But as long as you're using one of these three concepts, it should give you an edge over other traders to identify if that support or resistance level is either going to break or if it's going to reverse. So instead of taking a guess when we're reaching those levels, even if volume is correct, even if those levels have been respected in the past, you get that extra confirmation simply by taking a look to see what is happening on the tape. So earlier I mentioned something called buyers being absorbed or sellers being absorbed. Now what that usually means on level 2 is when a stock price is being pushed towards a particular level, if you have a strong support or if you have a strong resistance, typically the opposite side starts becoming stronger and they start absorbing those buyers or sellers in. Let me show you guys a live example. So if you guys take a look here, this is Amazon stock, right? So the key level we're going to be paying attention to is going to be 200 level. All right, so obviously we want to see what's going to happen with the sellers, if the sellers are strong around that level or if buyers are going to start picking up pace. All right, volume is there. It's showing us that it has a very high chance of breaking out, but the real picture gets painted behind the scenes in level 2. So if you guys see here, we have the 200 level where there is strong sellers, which is showing us that is a very strong level, right? Now, in order to see a breakout happening, we want to see those orders of 200 getting filled into something called time and sales. That is a transaction history. But as you guys can see here, those buyers are pretty much getting absorbed by the sellers because that 200 level is starting to have a big ask size, right? So when we don't see those sellers getting taken out, we see that aggressiveness from sellers increasing constantly, the numbers going up. That means that that is a very, very strong wall, and most likely we're going to see a reversal happening. So if you're in a trade here, right, you're already in for the breakout, this is your chance to exit the trade. And as you guys see now, we're seeing a flash of almost 8,800 sellers sitting at 200. There is absolutely no orders getting filled above that 99-cent mark in time and sales. What this is now giving us a hint of is that the sellers are too strong. They have absorbed all the buyers that pushed the stock into that 200 level, and typically this is followed by a reversal, and we do not see a breakout happening here. So for a breakout trader, someone who's looking to trade momentum, this is where they should either take the exit or refrain from getting in until we get that breakout above that level. We get that retest of 200. So pretty much the break and retest strategy is what would apply here. But looking at the tape gives you that extra edge of not getting caught in this trade if it does not break out, right? So you guys will see here the 200 level, buyers got absorbed, and we're going to start seeing a reversal happening pretty soon. Right, that number is still there. All those orders got absorbed, not a single order over 200. You will usually typically see few orders getting filled around that level, right? Those are market orders, that's completely fine, as long as you're not seeing an abundant orders getting filled above that level, right? That is the confirmation that the other side is strong. And now there you guys can see starting to pull back, not able to break through, and here comes that rejection. And this, depending on when the trade is taken, 0DT or weekly, you will be pretty much protecting yourself from losing a whole chunk of your position. And there it is. So this was just an example showing you how you want to add level 2 supply and demand into your key levels, because this will give you a higher conviction rate. If you're one of those traders who likes to jump in early, level 2, footprint chart, bookmap, all of these are going to give you an edge. You'll be able to understand if that support and resistance level is strong enough for the break or if it's going to reverse. So be it a reversal trader, be it a breakout trader, you'll be able to have a higher success rate by adding these into your trading strategy. Now, if this video helps you rethink support and resistance and change your outlook on how to properly chart and what indicators to focus on, comment below what other topics I should cover, and I'll see you guys in the next video.